Alright, y'all. Happy Saturday. I'll be giving y'all a weekly back test session for the whole week. Previous week, basically showing y'all my strategy and trades I would have took and trades that I didn't take that I could have, or trades that I took and lost, and how we can learn better from. So first off, we got Monday, which was September 1st. I do the same thing every day. Mark out my Asian session, London session highs and lows. And considering Monday was Labor Day, I didn't really take a trade. However, I could show you a trade that could have been taken if you were trading that day, but I didn't trade that day. Anyways, so the trade that you could have taken on Labor Day is really, we had this 15-minute fair value gap, as you can see right here. Mark this out. Market came right into it. I believe ES had tapped into it. I'm 100% ES tapped into its 15-minute fair value gap, and NQ barely just touched it. But as you can see on this 15-minute candle, we came into this fair value gap as soon as market open. So let's go down to the 1 minute time frame, and then after that, as you can see right here, we got these fair value gaps. Boom. And then we got this fair value gap right here. As soon as market broke out of that fair value gap, I mean, there was two fair value gaps right here, so maybe we could have went to the 2 minute time frame. You could have went to the 2 minute time frame, wait for it to break out here. You could have either entered on this candle after that candle closed at the breakout, and you could have targeted at least a 1-to-1, or just at least to this key level right here at the London high. Usually my stops are a 25-point stop loss, and my TPs are usually a 50-point TP, but considering it was Labor Day, you could have simply just traded a 1-to-1, and simply just like that, you could have taken this trade and made about $500 if you had one NQ contract. And for the next day, let's get that marked out. Alright. Now we got September 2nd, Tuesday. I believe I took a trade Tuesday, but let's mark these levels out. Asian session, highs and lows. We got London session, it's a low right here. And then go to the hourly time frame. I'm pretty sure there was a level down here that you could have traded off of. Anyways, yeah, there was a low down here that we traded into on the 4 hour. So go back to the 15-minute. Market came into this key level on the 15-minute, which you can see right here. Market open, we came down, pushed into that level, and scale down to the 1 minute time frame. This is simply how I find my entries and exits every single day, trading from key level, or trading at key level. Market open, we immediately came down into this, formed a fair value gap, since we have multiple fair value gaps in a way, we can go to 2-minute time frame. See if that would be a better entry for you. Okay, so yeah, considering we had a 2-minute fair value gap, we could have just used the 2-minute fair value gap, which was the last fair value gap on this. Price closed out of it right there. You could have had a entry right here, at least a 1 to 2 risk to reward. The spread looks kind of wide on here, but at the same time, trade idea still worked out. Simple as that. 50-point TP. And for real, I would have probably most likely traded all the way up to this London high. And you could have caught a literal 152-point move, which is about $3,000 with one NQ contract. And it's the same setups that happen every single day. Even if it's going up or going down, the same setups apply. Easy trade execution right there. Now let's go to Wednesday. We could take off this 4-hour low that we had bounced out of. Formed another 4-hour low right there. Now again, marking out my Asian session highs and lows. Looks like Asia session here got taken out in London session, so we could just use London session's high. Boom. We got Asia sessions low right here that didn't get ran into yet. And then we also have London sessions low that didn't get ran into yet. Now, taking into consideration some of these days, there may have been news, but still the same executions apply. Now, as you can see, market open, we were already at this London high. London high got ran. You could just use this hourly high here. Now, simply wait for market open. Market opened at 9:30. We came into that level here at 10 o'clock. Scaled onto the 1-minute time frame. And I did catch a trade this day, as you can see. I caught calls on this trade. Let me actually make sure how I did this trade. Oh yeah, I believe it was an hourly fair value gap. It was an hourly fair value gap. I remember this day. We had an hourly fair value gap here that market came into. In order for me to catch calls, which was about right into here, I believe. So yeah, scale down to the 5-minute time frame. You always have to align your time frames together. If you didn't know, the hourly aligns with the 5-minute. So we came down to the 5-minute. Waited for this candle to close at 9:55. Most likely it was like around 10 a.m. because I think there was news at the time. 1-minute time frame. I don't think it was a crazy news day, but it was a red folder. But I believe our trade was after the news. Yeah, our trade was definitely after the news. So we came into it, formed a fair value gap here. And if I'm being 100% sure, I believe, did we sweep this low? We didn't, but I think ES did sweep that low. What day was that? The 3rd? I'm sure ES swept that low, but let me confirm. Yeah, ES has swept that low. ES definitely swept that low. So we formed the SMT right there, and that's how I went calls on NQ. Right after this news, after we inversed this 1-minute fair value gap, I took calls Sorry if it seems like I'm rushing. I'm kind of in a rush, got somewhere to be. But after we inversed that fair value gap down there off of a SMT on ES, candle closed right here after the news candle came out, formed a fair value gap after this candle closed up here. I wanted to wait for more confirmation, so I waited for the next green candle to form outside of these two candles. So I went calls there, and I actually didn't win on this day, as you can see. I believe I made like $200, I believe, something like that. As soon as we came into this $500 right here, I moved stops to break even, and then we had got another move up here at 10:07, as you can see. Then I moved stops to like a little below this candle at 10:06, and then we ended up coming back down out of it, as you can see, coming back down out of it here, and I got stopped out around in this area for $200. So wasn't the whole full TP, but at the same time I still made profits on that day. Execution is still there. I mean, I could have did better on this trade by simply just waiting for real, because let's see, it was at 10:07, we came into this, bounced out of it. I should have waited for, I'm gonna show you exactly where I should have waited for. So we got this candle to bounce out of it. I mean, I could have waited for it later on in the day, to be honest. Excuse me. Because at the same time, we still ended up bouncing out of it and going higher, and I could have capitalized on that trade. We came back down, ran this low, came back down into the hourly fair value gap, and then formed another fair value gap out of it, or inverse fair value. We formed a fair value gap going into it again, and then formed an inverse fair value gap after this candle closed outside of it. And you could have called calls here, stops below. The spreads were wide, but at the same time, I would have had a 25-point stop loss like I always have. Market didn't come back into it. So this trade could have been a better trade with a 1 to 2 risk to reward right there. And then you could have caught this trade all the way up, and you would have smacked TP on this day. We were kind of accumulating, so this first trade, I see where I went wrong. We accumulated, we broke out, sort of, but we started accumulating after the breakout, and then we sold off. This would have been the manipulation and fair value gap right here that I just had the other trade entry on. You could have took that trade instead of the one I took. And then when the market came up here, I started chopping right here in this little range. You could have caught a trade by waiting for market to break out of the chop, which was right here. Break out of the chop. They call this the PDI, pre-distribution inversion. We broke out, manipulated right here, came back up. You probably could have found a fair value gap on the 32nd. Let's see if we could have found a fair value gap on the 32nd on this trade. Not really. But you could have taken the change of state of delivery here off that candle right here. Stops above at least these highs, and then 50-point TP as I do, and you could have caught this trade down That would have been a banger right there also. 15 minute. Now we're gonna go to the next day on Thursday. So I still made money Wednesday, but could have been better. Thursday was a crazy day. I remember taking a trade Thursday, and I could have made a lot more money, but let's get these levels marked out. We got Asia session right there, as you can see. I can already tell we broke out. We swept Asia low. And we had Asia's high here, relative equal highs from London high and Asia high. Market opened. We ran into Asia high immediately off market open, but I believe there was news, so I was waiting until after the news to trade. And as you can see, my exits or my positions are on here. It came out, market started sweeping that liquidity up there. We formed fair value gaps here. Let me see. These aren't the best fair value gaps. Let's see what the 2 minute looks like. Sorry. Yeah, so we had a 2 minute fair value gap here. If you could have took this trade, 2 minute fair value gap, we broke out of it here. You could have had entry about right here, 25 point stop loss, like I keep saying. Boom. You would have got a little scared there, but you would have hit in TP for sure. Market did go into a little drawdown, but we ended up holding and going back down. And you clearly could have took a trade entry there. That's a 1 to 2 restore war. TP would have smacked. The trade I took, I waited for market to come down and hit Asia low because we already had swept. Actually, I made a YouTube video on this trade right here. So if you didn't watch that video, go watch it. But the way I found this trade is my first trade was at L. We had this 2 minute fair value gap right here. Market came into it, rejected off this candle right here. I took puts down here after this candle closed. Got stopped out at 25 points, which was 25 bucks, but we instantly formed another fair value gap that got inversed right there. As soon as that candle closed out of it right there, I took calls on this candle, 1 to 2 restore reward, and I ended up making $500 this day because I had to take an L first and then I had to take a W. So I took a trade about that, broke that down in the Instagram reel and everything like that. And I could have held this trade longer, if we're being honest, so I can capitalize on more profits. I should have waited for at least this high right here. This looks like relative equal highs, so that would have been a better TP. We love relative equal highs for sure, so that would have been a better profit day. Friday I didn't take a trade. I am mad. I have execution on here, but it just got away from me. It just got away from me. I was so close to taking a trade, but at the same time I kind of FOMO because I had already told myself that I wasn't trading Friday, considering we had already broken out and swept these pre-market levels. I think it was London low. We had already swept London low pre-market, so I wasn't really looking forward to trading this day because we had already pushed up very high. PS was at all-time highs, and then yeah, so very unfortunate. Market sold off extremely, but so we have formed this 15-minute fair value gap here. Pretty sure there was more on the hourly, things like that. Yeah, let's just use the hourly fair value gap. We had an hourly fair value gap. Clearly it got inverse, but I went down to the 5-minute time frame after we came into it. After we came into it, This first 5 minute candle bounced. It started looking like it was gonna bounce out. However, I went down to even the 1 minute because I found my entries on the 1 minute, and then my light is about to die, so I'm about to hurry up and end this video. But as we're about to bounce out of it, we had a fair value gap here. Boom, but market failed to flip and go higher, so this candle came back down, had a change of state of delivery. You could have had entry right here, and this would have been the perfect entry on the day to literally hold all day. Now, clearly I was trading, well, if I was trading it, if I got the opportunity to, I probably only would have made about 100 points on this trade, 120 points, something like that. But this was the trade entry I feel like was the best entry for us to go all the way down. You could have maximized on this trade, caught 200 points, 300 points, depending on your runners. And that's pretty much the trade recap. So if you want to trade with me live, we go live every day, 9 a.m. to 11:30 a.m. weekdays, and we back test every weekend. So if you want to take advantage of that right now, it is 14 days free. If you want to check out my Instagram, it's Wells Trades on Instagram. Wells Trades on Instagram. So if you want to check that out, it's in the description below. You get 14 days free before your trial actually starts. So take advantage of that right now. This is the lowest it's going to be. And I'll see y'all in the next video.